Namaste and good evening, everyone. I, Ritika Gupta, Assistant Director at IMPRI, Impact and Policy Research Institute, Prabhav Evam Niti Anusandhan Sansthan, Nai Delhi, extend my heartiest welcome to you all to IMPRI #Web Policy Talk. Today we are here for a special talk on Are we in good hands? Is tax administration in India following good international practices? The speaker for today is Dr. Munawer Khwaja. This talk is being organized by Center for the Study of Finance and Economics at IMPRI. I would now like to welcome our moderator for today, Dr. Simi Mehta, who is CEO at IMPRI, to introduce us esteemed panelist and the program further. Ma'am, over to you.
Thank you, Ritika, and a very, very good evening to all of you, and good morning to friends in the United States. Thank you so much for joining us for this very important discussion. So to begin with, all of us know that a good tax administration has a positive effect on the economy and its people, period. What it entails, how are we going to navigate through this? All the discussion will be done by a very, very, very eminent panelist led by Dr. Munawer Khwaja. It is my pleasure to introduce to you the chair for the session, Professor Atul Sarma. He is the visiting professor at the Institute for Studies in Industrial Development, ISID, in New Delhi. He was former member of 13th Finance Commission. Welcome, sir. And with your permission, I would like to introduce to you our speaker for the day, Dr. Munawer Khwaja. Dr. Munawer Khwaja is a fiscal economist with more than 30 years of international experience in around the world in a wide range of tax policy and tax administration reforms in developed OECD countries, emerging economies, and developing nations in over 75 countries, including Greece, Brazil, Canada, Finland, India, etc. And he started his fiscal career in 1974 with the Indian Revenue Service, where his last position in 1996 was as the Director of Tax Policy in the Ministry of Finance, and he was under the then Finance Minister, Dr. Manmohan Singh. He has worked as a technical advisor in the Fiscal Affairs Department of the International Monetary Fund. His main activities included conducting research on best practices in tax policy and tax administration and how tax administration performance impacts the business productivity. And prior to this, he has worked with the World Bank headquarters as the lead fiscal specialist, providing conceptual leadership and managerial supervision for the World Bank's tax policy and revenue administration portfolio. Earlier, as the senior manager at KPMG Consulting Bearing Point Incorporated, he managed the firm's tax reform portfolio internationally. And he has also been the country head of the USAID's Afghanistan Economic Governance Program. He provided intellectual leadership for the post-conflict reconstruction and economic governance, including assessing the key developmental challenges. He has worked with the UN mission in Kosovo as the Director of Tax Policy at the Central Fiscal Authority. He provided his leadership in designing the tax policy and establishing from scratch the key elements of well-functioning tax and customs administrations. And Dr. Khwaja has been the senior fellow at Harvard University's resident advisory team in Ukraine from 1996 to 2000. And he has advised the finance minister, the parliamentary budget committee, and the state tax administration on a range of fiscal reform issues arising in a post-Soviet transition economy. And he has delivered his lectures on development topics at Harvard, Oxford, Duke universities, as well as at the European Commission and the US Treasury. So it is all but our privilege that one of his lectures is being organized at IMPRI. We are really delighted and we are grateful to you, sir, for being with us today. I would also like to inform and also introduce to you the discussants for the day. We have Mr. Ashok Sinha. He is former Indian Revenue Service officer. He is retired as the Vice Chairman of the Tax Settlement Commission. And Professor Indira Iyer, she's professor at National Council of Applied Economic Research, NCAER, New Delhi. And she is also a former IRS officer and ex-director of Tax Policy Research Unit in the Ministry of Finance. So we have a very, very eminent and distinguished panel. And without any further ado, I would like to invite Professor Atul Sharma for his opening remarks. Professor
Thank you.
Sharma, over to you.
Thank you.
Thank you, sir.
Good evening, everybody. It is I feel very honored and privileged to have been asked by IMPRI, more particularly Dr. Arjun Kumar, to chair this important lecture. It's a very significant lecture by Dr. Munawer Khwaja. I would like to make a few opening remarks, not to really put before you my own curiosity about the issue that you might be discussing. That for effective and efficient tax administration, tax, what is required, both tax design and tax administration are important. But tax administration depends on how well the tax is designed. We have because if tax is badly designed, that would lead to many efficiencies. I would like to share, please, a couple of examples how the Indian system has become so inefficient. Particularly to begin with the whole tax system, we have an unrealized tax revenue of about 11.09 lakh crore, of which about 86.2% are disputed. This suggests that tax design is not simple, not transparent, because of which 87% of this tax revenue are disputed. Only 13% is also unrealized, but they are undisputed. But the point I'm trying to make is that tax design is critically important for efficient tax system. The other example which I would like to give, that in India we have a country of 137 crore people, out of which only 1.5 crore people effectively pay income tax. Of course, of late, because of many people file almost 6 crore people submit income tax return, out of which only 1.5 crore people pay tax. What is more, that only 4% of the taxpayers pay 60% of the total tax revenue mobilized from income tax. The other thing is that of the income tax payers, the salaried incomes account for salaried class taxpayers are 3 times more than non-salaried class. So this all suggests that we have some distortion in the whole tax design. If tax design is faulty, tax administration cannot be efficient to my mind. Coming to GST, for instance, this is remember that in the case of direct taxes, an attempt was made. It is not that government did not recognize such distortions. Way back in 2007, government did initiated direct tax code. And in fact, direct tax code was drafted and placed in parliament. It was referred to the maybe Dr. Khwaja was at the time Minister of Finance, that direct tax code was referred to the Standing Committee of the Parliament, and government promised to introduce direct tax code with effect from April 1, 2012. But because the report of the Standing Committee was delayed, that did not happen. And since then, nobody talks about direct tax code. Direct tax code attempted to simplify the direct taxes, removed, phase out various distortions such as exemptions and deductions. It was an attempt, it was a reform towards making the direct tax system efficient, but that did not happen. And since 2012, nobody talks about direct tax reforms. No doubt, there is tinkering direct tax from time to time. But remember, this did not happen, despite the fact the direct tax actually, in the case of direct tax, state governments are not involved. So it is easier to introduce direct tax reforms than the indirect taxes. But yet, it never happened. At the end, why I'm saying all this, I'll tell you. Coming to the indirect taxes, I think it was an extraordinary achievement of the Indian federal system over a long-drawn consultative process that GST could be introduced. There was a consensus both amongst the states and the central government, and they could introduce the GST. That was a great achievement, speaks a lot about the cooperative federalism. But this tax was designed so badly, with five rates in GST, which makes the tax really ineffective. And what the CSG report has observed, that when this was introduced so hurriedly, with a faulty design of the tax, it could not put in place the IT infrastructure that is required to make the tax effective. As a result, we have noticed that GST, even though it's a very good tax, did not yield the desired results. Why I'm saying all this, that there is a political angle in the tax design. If the tax design is faulty, tax administration cannot be really effective. This is a point which I would like to submit before Dr. Khwaja, and I would like him to, in the course of his lecture, I would like him to explain or tell us, enlighten us, how to handle this political economy of tax reforms. Because it is, very well, since you're the Associate Minister of Finance, many attempts were introduced in the country. Many commissions were constituted to look into the reforms of tax system. But yet, we have a very inefficient tax system, as a result of which we have a huge unrealized tax revenue. We have got very low tax base, and we have not been able to attempt a proper reform. With this opening remarks, may I request Professor Khwaja to give the lecture. Thank you.
Thank you, Professor Atul Sarma. It is indeed thanks to IMPRI for the opportunity to discuss this very relevant topic at IMPRI, and I'm really honored to have a person of Professor Atul Sarma's eminence to be chairing this session. And Professor Sarma, I have taken your thoughts into account, I think I had a premonition that you would have this. So instead of tax administration, you will see here, it is the tax system. So I've changed the topic slightly from is the tax administration following good practice to is the tax system.
I got it from here.
So I had kind of, I did feel that we need to talk about that also. Now, let's pause for a second about this huge pandemic. The whole world is going through a dismal time because of this health disaster of immense proportion. It hasn't happened in 100 years. And like all other countries, India is not immune from this. And in some countries, including where I am living in the US, the whole pandemic has taken a political turn. Wearing a mask means you are a Democrat. If you're not wearing a mask, you are a Republican. And people are getting sick, but they are still not wearing masks if they have been told by their leader, the former president, that mask is not necessary. People are the cases are spiking, but it is a political statement. Now, the reason why I chose this topic was because I was listening to an interview by Karan Thapar with my former boss, Montek Ahluwalia, just before, on the eve of this year's budget, and it was a 45 minutes interview. At the last question that Karan had was that what would be your final advice to the finance minister for this year's budget? And Montek mentioned that we have all these macroeconomic issues that are solved from year to year. One thing that has not been resolved over the last 50 years is India's tax administration. It is not following good international practice, and we should revamp the system to make it of an international standard. So that is why I chose this topic. Now, can we move to the content of this talk, please? So the first slide that I will be talking about is the relationship between the tax system and economic performance. Simi had talked about that, mentioned about that. Then we'll have a look at the economic context, especially because of the pandemic. We need to discuss that a little bit. Then I'll talk a few issues about the tax policy, where I'll talk about the tax to GDP ratio, the GST design gap, and the state-sector relation, as Professor Sarma had kindly pointed out. Then I will talk about the income tax and where the big holes are. And after that, I'll talk about the tax administration. Since we have very limited time, I'll touch on these issues. And then I hope the discussants would take this up. The first would be a fragmented tax administration. Then the big elephant in the room, we'll talk about that. Then the faceless assessment, which is a good beginning. The overreach in search and seizure provisions, and finally dispute resolution. So let's move to the first. Now, there is a wealth of economic literature which shows that the quality of tax administration has a direct impact on the productivity of firms. When I was in the IMF, we did a research. The paper is published at the International Tax and Public Finance Journal. It is cited here. It shows that the tax compliance costs for small and young enterprises is disproportionately higher compared to large enterprises. And the research we used World Bank data for enterprise surveys from about 70 countries, and we used data from Tax Administration Diagnostic Assessment Tool, which has been done in about 100 countries, where the quality of tax administration, the performance of tax administration is measured. And using a multi-regression panel data analysis, we came to the conclusion that better tax administration, it attenuates the productivity gap of small and young firms relative to large and older firms. And this research was a result of a robustness that was which controlled for other economic and administrative factors. So basically, and we did not invent the wheel. I mean, Kautilya in 300 BC said that Kosh Molodan, which means tax is the key to authority, and it is also key to economic development. In those days, people didn't talk about economic development, but it's definitely true that taxes are key to economic development. India has made huge technological, I mean, the Indian Tax Administration has made huge technological strides since 2003 and again in 2012, when a lot of information and data were centralized, all returns were processed in one place all over the country. And this was a huge achievement for a country as large as India. Of course, we'll talk about what Professor Sarma mentioned. The country is huge, but the taxpayer base is really small. Now, let's move to the next slide. Now, here you can see that India's GDP, the growth in GDP was 8.2% to 8.3% in 2004. It has been, the growth has been slowing until 2019, and then it went down to -8% during the pandemic. In the World Economic Outlook report of April 2020, which was titled The Great Lockdown, it showed that India would, instead of having a growth of 5%, it will have a growth of 1.9% in 2020. It actually it actually went down to -8, and the World Economic Outlook report of January 2021 showed, and this is based on that India's GDP fell by -8%. And this is not just India. A lot of countries have had this huge recession during this period. But then it is expected to go up by 11.5% in 2021, and then again to and then again to 6.8% next year. Now, but most economists believe that it looks like a V, but it is not really a V-shaped recovery. It is actually a K-shaped recovery. And can we look at the next slide, please? So you see that the richest group of people, the blue line, their economic, I mean, they all went down, but they shot up very quickly up, and their economic recovery has gone to a much higher level compared to the index number of 42, where they all started. Whereas for the most poorest section of the people, the dark brown line, it slumped very much up to September, and then it is recovering slightly. So it is indeed a K-shaped recovery. And so what has happened is that the richest have seen their income increase, while the poorer household have suffered income loss, job loss, and consumptions have been destroyed. And now we can see that this is narrowing to some extent. Even the UN Economic and Social Council for Asia Pacific, they mentioned that the whole Asia Pacific region, including India, will be looking at a K-shaped recovery, mainly because of COVID-19, because the pandemic has exposed economic fault lines which were hiding under the carpet, and vulnerable groups are getting further marginalized in the post-pandemic, will get further marginalized in the post-pandemic period. Again, as we have seen that the unemployment went down to 24% in April 2020. This was probably possibly the result of a decrease in demand, as well as the disruption of work faced by companies. But in January 2021, India has seen an unemployment rate improve to just 6%. And now, what do we do about that? The conventional wisdom taught to us by John Maynard Keynes who I admire very much, is that in a recession, government should borrow money and spend it on useful projects to kickstart the economy. When government does that, the money goes into the pocket of its citizen, who in turn can spend it on their needs, expanding the size of the economy and ensuring a prosperous recovery. So I have heard many critics talk about the deficit, fiscal deficit being too high this year. Let's not talk about fiscal deficit at this time of recession. We need a fiscal deficit in order for the economy to rebound. Now, as I said, factors that can determine the sustenance of recovery is increased government spending, increase in employment, and household income. During the Great Depression of the 1930s, the whole world, no one was listening to John Maynard Keynes. The only person who listened to John Maynard Keynes or understood him was Franklin Roosevelt. He was the first to do that. He was the first to put Keynesian economics to good use. And he said that our greatest primary task is to put people to work. And that should be the primary task for the Indian government. And I think in this year's budget, we have seen some efforts to putting money into the hands of the people. In the US also, the Biden administration with the rescue package has put $3 trillion in a rescue package. These are all good strategies, and that's the way to go. In fact, John Maynard Keynes was so pleased with Roosevelt, unlike his other European leaders who were not listening to his theory of government spending, higher government spending. He wrote an article in the New York Times on 31st December 1933, congratulating Roosevelt for following his advice. And he said, I'll quote, "You do not need to intimidate other countries or terrorize minorities to prove your mettle. You just need to spend more money. You are the one who has shown the necessity of a profound change of method and is attempting this without intolerance, tyranny, and destruction." He was, of course, referring to the increased militarism that was then pursued by the Soviet Union, by Italy and Germany. So he was really pleased that FDR took his advice seriously, and following the Great Recovery in the United States, other European countries started following suit, and then the depression was put under control. So putting money into the hands of the people would be the right way to go. Can we move to the next slide? We are talking about the tax to GDP ratio. Can we move to the next slide, please? Yeah, India's tax to GDP ratio is about 16.69% as of 2018 for both the center and the state, and this has been improving over the years. And for center alone, it is about 12%. Now, so overall about 17% and 12% for center. Now, this is about half of the average tax GDP ratio of OECD countries, which is at 34.3%. Of course, this is understandable. Rich countries can afford to levy more taxes. I consider public finance to be a luxury good. The more money you have, the more you can spend on public services, and so more you can levy as taxes. So poorer countries are not able to afford taxes, but India is we have dreams of becoming an economic superpower. So we should not stay at this level. We should try to. We have been improving, but we should try to improve more. The IMF has said that according to IMF literature, developing countries should have a tax to GDP ratio of at least 15% in order to have money necessary to invest in the future and achieve sustainable growth. But India should aspire no longer to count itself as a developing country, and therefore we look forward to increased increased tax to GDP ratio. And for that, both tax policy and tax administration are important. And as Harberger had said, a good tax policy is as good as the tax administration makes it out to be, which is very true. I mean, you can have the best tax policy, and if the tax administration screws it up, you don't get very far. It is the same thing as people. I don't remember which Indian cricket captain said that a bowler is as good as the batsman makes him out to be. So you can be a very good bowler, and if the batsman has been hitting sixes all around, you are no longer a good bowler. So a tax administration really holds the key to achieving a good tax system, even with the best tax policies. So I take the point that Professor Sarma had made on this. Now, can we move to the next slide? Just take a look at the data from other BRICS countries. So India is the brown. This brown is here is India. India's tax to GDP ratio has been consistent at about 17 to 18%. If you look at China, it started much lower than India, about 16% tax to GDP ratio, but now it has climbed to, I'm just talking about the BRICS countries, it has climbed to close to 25, 28%, 26%. Then the Russian Federation is the big yellow one on the top. During the Soviet times, tax ratios were very high, but now even with the lower tax ratio, it's still very close to its original position. And then I have South Africa in the middle, which has a consistent tax to GDP ratio of 28%. If we want to be close to what and Brazil is the green one on the top, started with 36% and went down, and now it's close to 32%. So if India wants to be an economic powerhouse, as I remember when Dr. Manmohan Singh made his first speech in proposing the reforms in 1997, I think. One of his words were, we should look towards becoming an economic powerhouse. And in order to do that, we should not linger on the tax to GDP ratio of developing countries, but move closer to what the BRICS countries have. Next slide, please. Now we look at the GST. Now we look at the GST. The first thing we look at is the intrinsically GST or VAT, as it is called in most non-Commonwealth countries, is an excellent tax. 166 countries globally have used VAT and GST as the mainstay of their public finance. However, there have been serious design flaws, and Professor Sarma has pointed them out. I will point out just one or two of them. One is the complex center-state relation, which has made this very difficult, and then the design flaw itself. Now, but first look at the GST gap, which is the difference between what potentially one can collect with what we are actually collecting. Now, in India, the GDP gap is about, the GST gap is about 6% of GDP, which translates to about 49% gap compared to the potential what we could have collected. Now look at countries. I've given a chart where you see countries like Sweden, which has a tax gap of only 1%. Russia also 1%. Russia has moved from about 15 to 12% to now 1%. Finland 4%. Portugal, you look here, Portugal 10%. Portugal had a tax gap of 25%. And because of improved tax administration and getting use of technology, using electronic invoice reporting, and most of their assessment is done by the computer, and human interference is minimal. I'll talk about that later. It has brought it down to 10% from 25%. Brazil, look at the BRICS countries. South Africa, 13% VAT gap or GST gap. When I say GST or VAT, I use the term interchangeably. Brazil, 24%, India, 49%, China so we can draw some consolation in the fact that China has a higher tax VAT gap compared to us, 55%. Now, just a point where I have a statistics in front of Brazil, because in Brazil there is no published data on VAT gap, because VAT is collected by the states in Brazil, and the VAT on goods are collected by the states, and services are collected by the federal government. So they don't have full numbers on VAT gap, but they have numbers of the overall tax gap, which means including income taxes and everything. So this number in Brazil we have to take with a pinch of salt, because it is, but we take it as not with a pinch of salt, as a proxy, 24% overall tax gap. Anyway, so let's move on to the next slide. Now, no, I think we okay, you can put it there. But now, talking about GST, India has had a checkered history as far as GST is concerned. The complex, you can leave that. Yeah, the complex center-state distribution of responsibility. Of course, there were some constitutional amendments to try to solve that. The politics of this is unbelievable. I have witnessed it myself when I was there. For 20, I think more than 20 years, the Empowered Committee debated about GST. First, the Congress was supporting it and BJP was opposing GST. And then when BJP came to power, the BJP was supporting it, and then the Congress started opposing it. So the politics is really it was really unbelievable. But that's what happens in politics, and no political party is sacrosanct in that respect. They all make the same mistakes. Now, the assignment of taxpayers between the center and state is horrendous, and I believe Professor Sarma had talked about that. The formula is really below 1.5% turnover. All tax the tax will be administered by the state for 90% of the cases, and 10% by the center. And then above 1.5 crores, it will be 50-50, and it will be decided by the computer which case goes to the center, and which case goes to the which taxpayer goes to the center and which taxpayer goes to the state. Now, as a result of this, what has happened is that if I am a business which has activities in all the 28 states, then I have to file return in every state. And there are separate taxpayer identification numbers, even though they are all linked to TIN. And this is not good practice. In most countries, there is a single taxpayer identification number, irrespective of which state or how many states you're working in. Take the case of Canada. Canada has a federal structure. It has both the federal GST and the provincial GST, but it has taken a very good viable solution to that. Instead of having multiple tax administrations creating a mess, it had an agreement with the provinces. So the federal government, the Canada Revenue Agency, collects VAT for the federal government and for the provinces, and the provinces pays the federal government a collection fee of 1 or 2%. I don't know what the collection fee is, but so it is a uniform tax administration that administers VAT. all over Canada, irrespective of the fact that the state VAT, state GST and federal GST are separate. In Russia, it is a uniform tax administration that administers all the GST. Now, in Canada, an interesting thing happened that Quebec decided. Quebec has had its own peculiarities. So Quebec decided that it will collect its own VAT and it will not allow the federal government to collect VAT. Now the federal government was so magnanimous, they said, okay, you collect it for us also, and we'll pay you we'll pay you a collection fee for doing our work. So even in Quebec, it is a uniform tax administration. It is done by the Quebec Revenue Quebec, as it is called in French. Now, Professor Sharma talked about the flaws in the GST. GST is basically a tax on goods and service at a standard rate that applies to most goods, and 1 or 2 reduced rate and the 0 rate for export. In India, we initially started treating GST as an extension of central excise, looking at it commodity-wise, looking at rates for specific items. This is not how GST should work. This is internationally for VAT or GST, there is 1 uniform standard rate, 1 or 2 reduced rate for essential goods, and then perhaps in some countries, 1 rate for luxury goods, some not. And then you have the 0 rate for exports. Unlike excise, you no longer need to revise commodity-wise rate. In excise, I remember every year, 50 rates would be going up or down, depending on how many petitions were received. That is not how GST works. That is not how it should work. And Professor Sharma has rightly pointed that out. In the initial stages of GST implementation, hundreds of circulars were issued to rationalize the rates and simplify procedures. Now we need to get out of this excise mindset and have a uniform rate, uniform standard rate, 1 or 2 reduced rates, and that's it, and not specify individual items. This is like central excise. For instance, in India, there's a 28% rate on chocolates. Why chocolates? Luxury goods, I can understand 28% rate. Cement, I don't understand why. And you will not believe it. Hotel accommodation, you can find hotel accommodation rates varying. India has 6 different rates for GST, which is again not at all good practice. We don't have more than 3 rates or etc. or 4. Sometimes 6 rates is really too much. But then GST or VAT is not a tax which you use to achieve progressivity. For achieving progressivity, you have the income taxes. You have the progressive rates in income tax. But here in India, for GST also, we have a, even for, I mean, that's how we have this to get out of this excise mindset. We have for hotel accommodation costing more than 7,500 rupees, it's 28%. Then less than 7,500, it's 18. Less than 2,500, it's 12. And less than 1,000 rupees, it's 0. What kind of GST are we talking about? This is not how GST should work. And then we have highly defined items on what for different rates. Heavily processed goods. I don't know what is heavily processed goods. Frozen vegetables is at 18%, but frozen meat is at 12%. I don't understand the logic. And then again, you have a luxury rate of 28%, but business class airfare is at 12%. I mean, we are not really achieving progressivity. First, it should not be, but then having so many rates and so many minor distinctions between frozen vegetables and frozen meat at different rates, it's a breeding ground for litigation. And then let's look at gold, 3%, and precious metals and stones, 0.25%. I mean, where is the progressivity in this? Gold and precious stones are usually purchased by rich people and people who can afford them, and therefore to have them at precious metal is at 1/4 of 1% I mean, we are we are trying to achieve progressivity in hotel accommodation, but give it up in gold and precious metals. Now, if you look at other countries, say Belgium has just 3 rates, 21, 12, and 6, and it's very well defined. Standard rate, there is no definition, everything falls under that. Reduced rate, 12%, 6%, defines very broadly, not by item, not by commodity as we have done here. Brazil also 17, 12, and 7. In Canada, the federal rate is 5%, and the provinces, the rates vary from 5 to 15. So you add them up. Denmark has just one rate, 25%. Germany has 2 rates, 19 and 7%. So I'm just making the point that Professor Sarma had made, that having 6 rates is really not good practice. UK has 20% standard rate, and there's a 5% reduced rate. Now, in terms of the GST administration, many countries are moving towards electronic invoice reporting by taxpayers, and which gives rise to pre-filled returns. So the taxpayers, and this is done through a massive algorithm where you do information matching from input via input invoices and output via invoices, and then you pre-fill the returns. And most discrepancies of taxpayers are detected automatically and in close to real time by a complex algorithm that detects mismatches. And most of these cases are settled online without the intervention of human beings. The computer itself says there is a discrepancy between what you reported as input credit and what has been shown by others as input credit. If the taxpayer is able to explain that, the computer adjusts that. And if not, if the taxpayer doesn't respond or doesn't follow up, then only in that case, which is less than 1%, there is need for a tax audit or investigation. As I said, Portugal, Spain, Chile, they have very good examples of moving towards that and have helped them improve their GST ratio, reduce the GST gap. Now they are moving to income tax. This is the slide we have. No, the one you had, the previous one. No. Yeah, that one. So here you see the registration of active persons, active personal income taxpayers as a percentage of the citizen population. Professor Sharma alluded to that a little while ago. So in some countries, it is even more than 100% because there may be non-residents who are living in those countries. And Greece is a holiday destination, so maybe a lot of people file. So it's more than 100% of their population. But even most of the countries, it's close to 60% of the active personal of the citizenry are active VAT registrants. In India, it is very small. If you look at it here, it is close to less than 3% or something. Now, the basic design of corporate income tax and personal income tax follows good international practice. However, in most OECD countries, personal income tax is about more than twice that of corporate income tax. So most of the income tax revenue comes from personal income tax, and much less than in India. It's the reverse. Personal income tax is about 2.6% of GDP. This was shown in one of the earlier charts in my presentation. And corporate income tax is 3.2%. The gap was much higher. It is closing down. However, the tax base, and Professor Sharma alluded to that, is exceedingly low. And in a population of 1.36 billion citizens, we have less than 50 million or 5 lakh registered individual taxpayers. And how many of them are active, I don't know. And the reason is not far to seek. According to the census in India, the total workforce was census, the last census, the total workforce was 330 million. You take out housewives and children from the population. Agriculture and allied activities accounted for 166 million. And that leaves 164% non-agriculture. Out of that, we have less than 50 million registered VAT payers, which means only 1/3 of the are registered to VAT. If you look at the data on middle class, India has a middle class 121 million, which is 4 times the population of the whole population of Canada. It has 121 people in the middle class, and only 1/3 are registered for VAT. And there are several reasons for that. One is the large unorganized sector and a large amount of cash economy not going through the bank system. And then the huge loopholes provided by agriculture. Agriculture is not taxed at all. So if I have income from whatever other sources I have, I can always show them partly as agriculture income and get exempt. This is what people did during the demonetization. A lot of people went to farmers and said, "This is my 50 crores. Can you show it as your agriculture income and give me back the part of the money?" So a lot of the undisclosed income was laundered through agriculture income, and that is again a huge loophole. I don't know how we'll be able to solve it. Most countries around the world, they tax agricultural income. Although agriculture is a very powerful lobby all over the world, but they do manage to tax agricultural income also. The second is the loophole of the joint family. Again, this is unique in India. No other country that I know of has this joint family loophole. I have income from whatever sources. I show half of it under the joint family system, and as a result of that, where the tax is different and this income is split, and I pay at a much lower rate. So these are huge loopholes. First, the large unorganized sector, the agriculture whole, the family, joint family whole loophole, and then a major is which I had also discussed with Indira a few days ago, the very high basic exemption limit, the standard deduction. As far as standard deduction is concerned, the per capita, it should be linked to the per capita income. For the US, for instance, the per capita income is $63,000 and the standard deduction is 25,000. I'm just giving round numbers. It's a little bit different, 25,700. So which is about 40% of the per capita income is the standard threshold is the threshold for standard deduction, a basic exemption limit. In Canada, where the per capita income is 51, these are all in US dollars, 51,000 per capita income. The standard deduction is 10,000, which is 20% of the per capita income. In UK, it is 36% of per capita income. Compared to that, in India, with a per capita income of 135,000 rupees, means 1,35,000 rupees, the standard deduction is 250,000, plus they will get an extra 250,000 as a rebate under one of the new sections that has come in. So basically, if you have income up to 5 lakhs, you do not pay any. So this is about 3 to 4 times the per capita income compared to the country that I mentioned, where it is a 40, 20, 36% of the per capita income. So that is another loophole, which causes the tax base to be really narrow. And I think in the interview with Karan Thapar, Montek had mentioned about the very high exemption limit that India has. And now, I mean, in older times, we could justify that because of the capacity of the tax administration to handle a large number of cases. Now, with the central processing unit in Bangalore, we don't have an excuse for not lowering the exemption. Of course, this will have huge political implications, and no political party would be willing to lower the basic exemption limit. But the way they can do it is to just let it stay at that level and let inflation eat up the exemption limit so that it arrives at some level of per capita income and not 3 times the per capita income. In corporate income tax, we have less than 5 lakh taxpayers, of which half of them file loss returns. God knows where all this GDP growth is coming from if half of the corporations are showing losses. Now so here we have looked at the personal income tax. I showed you this. In India, it is a very small percentage of the population, and I discussed with you the reasons for that. Let's move to the next slide. Yeah, now let's move to tax administration. We have dealt with tax policy now. Let's move to tax administration. And here you will see, we'll talk about a fragmented tax administration. Now, most countries in the world, in most modern tax administration, the tax administration is integrated. In India, we have a fragmented tax administration. I have discussed this topic in many forums in India. But the vested interest in both the administrations and in the government in general do not want to keep it fragmented. But we have a fragmented tax administration with an artificial bifurcation between direct and indirect taxes. That distinction is archaic, and it is not used in most parts of the world. Almost all of Europe, Latin America, Africa, and Asia now have integrated tax administration, a single administration that administers VAT or GST and corporate income tax, because the corporations are the same. It's the same Tatas and the same Ambanis and the same Birlas and we have a different. They deal with direct taxes separately and with indirect taxes separately, and as a result of that, there's a huge opportunity for companies to cheat between the two taxes, and this opens the avenues for fraud. And with information matching and cross-checking between direct and indirect administrations almost non-existent, the tax evasion has a field day. Now, a good beginning has been made by creating a taxpayer research unit, which is a combined unit. So that's a good beginning, but this is only limited to research work and policy work. The administration should come together and all data. So if a person is auditing a company, they should audit both the corporate income tax and the VAT together. Of course, custom should still stay separate because custom has a different policing role in terms of border security, smuggling, anti-smuggling, anti-trafficking. But the rest of the revenue, personal income tax, corporate income tax, GST, should all be done in one administration. And this is how most countries do it. And those that did not, most countries that did not have it, like UK and Canada, they had split tax administration. But about 20 years ago, they got rid of it, and now they have unified tax administration with, of course, a separate organization for border security. In the UK, it's called Her Majesty's Revenue and Custom. They have a single, in Canada, it's called the Canada Revenue Agency. Now, between center and states, there are good examples elsewhere. I gave you the example of Canada, where through agreement, the center and the state agreed that it will be administered by one agency, either the center or the state. In Quebec, it is administered for both federal and state taxes by the state, by the province, as they call it in Canada. And in other provinces, it is administered by the federal government. But it's one administration that administers. And that allows a lot of information matching, allows a lot of, and it prevents a lot of a lot of uh, getting information on the information on the taxpayer, and it reduces the opportunity for um, fraud. Now, the second issue on the tax administration is that because of the holy grail of seniority that is sacrosanct and it trumps meritocracy, there is little opportunity for strategic direction and vision because no chairman of the CBT has a long tenure. I mean, Ashok has worked in the CBDT with the chairman for a long time, and maybe he will speak about that. But I mean, in his 6 years at the CBDT, he may have seen at least 10 to 15 chairmen, a turnover of 10 to 15 chairmen in a span of 6 years. So what kind of strategic direction or vision can a chairman give if he already, the moment he joins, he's waiting for his retirement in 4 months and is finalizing his pension papers rather than taking care of. I mean, the chairman's role is very strategic, is very important, and it is important that the chairman should stay for at least 3, 4, 5 years. I mean, if you look at HMRC, most, they call it chief executive, have had a tenure of either 3 years or 4 years. And same thing in Canada, same thing in the US. In the US, the head of the IRS changes every, when the president changes. If the president has a second term, the head of the IRS may stay for 2 terms, which is 8 years. So we should move towards a tenure system in the board so that they can take strategic direction, they can take decisions on a long-term vision of the tax administration. One of the reasons why the tax administration in India is not following good practice, except for in the technology area where big advances have been made. And I believe Indira can talk about that in greater detail. We should have a system where the chairman can stay for 3, 4 years and take a strategic view of what reforms need to be taken. And again, I mentioned that there's a diagnostic tool which is endorsed by the UN Sustainable Development Goals. It's called TADAT, Tax Administration Diagnostic Assessment Tool. And this has been used by more than 100 countries. And I have conducted TADAT assessments in advanced countries like Canada and some of the Nordic countries, as well as many developing countries. It is a good tool to find out where the weaknesses are in terms of good international practice. And then the tax administration can take a strategic view on what reforms are needed and how to make the tax administration of good international standard. But with chairman staying for 4 months to 6 months, that will not be possible. You need chairman to stay for much longer period for that to happen. Now, the next is the big elephant in the room. The big elephant in the room is corruption. Corruption comes in various forms. It can be in the form of extortion. It can be in the form of collusion or lucrative positions. You know, I've seen officers talk directly to the commissioner saying, "Sir, I have 2 daughters to get married. Can you give me a posting where I can earn money?" So this is the level of blatancy this is the level of blatancy in terms of corruption. Now, bribery in the revenue administration includes payment to alter or reduce tax liability, payments to ensure that revenue officers turn a blind eye to illegal activities. I mean, this happens a lot during search and seizure procedures, or in customs during drugs or weapon import. It also, when tax officials are given kickbacks to provide them with lucrative tax exemptions, which normally they would not have got, and also payments for obtaining licenses in terms of indirect taxes and clearance in direct taxes. Now, if you look at CVC data, it shows that both CBDT and CBEC figure very high on the number of corruption cases dealt by them. Now, out of 9 officers, this is from the report of 2019, out of 9 officers who were prosecuted, for whom prosecution was sanctioned, 3 were either from the CBDT or CBIC. And these are all commissioner and higher rank. Again, out of 5 pension cuts proposed by the CVC, Central Vigilance Commission, 2 were from the of the 5, 2 were from either CBC or CBIC, and they were both of commissioner and higher level. And in addition to controlling corruption, there has to be a kind of ethical standard for ensuring that that the people at the top do not give bad examples which can be emulated by the juniors. For instance, there have been chairmen who have joined the board of directors of Reliance after retiring from chairmanship. It's a different thing when you resign from the service mid-course and join the private sector. Then you're not you are in there for a long haul. But after your retirement as chairman, if you become a board member of Reliance, it does not. I'm sure these are all innocent coincidences, but and the same, not just the CBDT, the chairman of the Central Vigilance Commission, the watchdog for anti-corruption activities, the chairman of the CVC joins Reliance as a board of directors. I'm sure this was an innocent coincidence, but in terms of integrity, you don't just have to be honest, you need to appear to be honest too, because it has to, so that it doesn't set a bad example for the others. So let's move to the next slide. Yeah, here we look at the corruption perception index ranking, and the first ranking in terms of corruption, I mean the least corrupt is New Zealand, which is ranked #1, and this is produced by the Transparency International. New Zealand has is ranked 1, Singapore is ranked 3. The worst country is ranked 179. They kind of rank 179 countries. And I have marked the BRICS countries in red and the SAARC countries in green and India in the middle. So India is ranked 86 in terms of corruption. The higher ranking you have, the more corrupt you are. So Somalia is the worst corrupt. Bangladesh is 146 ranking, very corrupt. Russia 129, it's a BRICS country. Pakistan 124, Brazil 94, India 86. So we are better than some of the BRICS countries and some of the SAARC countries. But China and South Africa are much lower, 69 and 78. Bhutan, hats off to Bhutan. I mean, a tiny country, but its corruption level is ranks 24th highest. I mean, it is one of the top in terms of honesty. So 24th ranking in terms of corruption, least corrupt. So this is again an aspect which is a big elephant we have talked about. Now let's look at the faceless assessment. This is a very good beginning, and this will, I'm sure, help reduce corruption to some extent because of lower contact between taxpayers and tax administration. I think Indira, who has worked on this issue a lot, will be able to throw more light on this. The intention is very good, and moving forward, it will lead to good international practice, but the design needs to be further evolved. We still have a tax administration which follows the zamindari system. Taxpayers still belong to a particular tax officer, a tax office jurisdiction. Despite all the faceless assessment and everything that is being done, if I am based in Patna, the my scrutiny assessment may be done somewhere in Chennai or Coimbatore. That is all very good, but still, I still have to report to the income tax officer who is designated for my jurisdiction in Patna. So that has to go. Now, a good practice is that we don't have these jurisdictions anymore. It flows from the old zamindari system, where you were answerable to your zamindar. Good international practices, there is no jurisdiction. And for instance, when I file my return, it goes into a space. And if there are any questions, questions come from space, and I answer into space, and the matter is settled in space. So, as I said, in Portugal and several other countries, all assessments are done automatically without the interference of human beings. In most cases in India, the central processing unit does that for a large number of taxpayers, mainly salaried taxpayers. But wherever there is scrutiny assessment, despite the faceless assessment, I mean, this is evolving, and I hope over time this will be corrected. Now, the last 2 points I want to talk about is about so we should get rid of the jurisdiction system with respect to tax. But there's no jurisdiction. You are a taxpayer. You file your return. If there are queries, the queries come from the IT system, generated by the IT system. And if there is an assessment, it is a faceless assessment. But you don't report to a particular tax official. That is really not good international practice. Now, another area which is of serious concern is the overreach in search and seizure cases. In search and seizure provision, the power of search and seizure is common in most good tax administration, but they are used very sparingly. In India, it is almost routine, and I have been to many searches, and it is extremely intrusive, and it is against good sense of privacy, and it's a major source of corruption also, both in terms of extortion and in terms of collusion. And it is abused by politicians of all parties to intimidate their opponents. It has been used from the time the search and seizure provisions to now, and these are used by politicians of all parties. And so, if you look at this chart over here, this was produced by the OECD. They did the chart of 60 countries. I mean, most tax administration have the power to obtain third-party information. If you look at this, request for third-party information. Most tax administration request information from government agencies. Entering business processes, business premises is also, I mean, about how much is it? About 35%, 35 of the tax administrations, about half of the tax administrations examined do enter taxpayers' business premises and seize taxpayers' documents, about less than 30%. But entering taxpayers' dwelling, you look here, nothing. No one enters taxpayers' dwelling except, I think, maybe India, Pakistan, and Bangladesh are the three countries. Maybe Sri Lanka also. I haven't followed there, but this is really something that we should get rid of as soon as possible. Other things, again, requires record on request, and all these things are powers that are used. But entering people's homes is really over-intrusive, and we should try to get rid of that. And as a result of that, what happens? Firstly, corruption, both extortion and collusion. And as a result of that, you get half-baked cases with insufficient evidence, which leads to a very low percentage of conviction. Let's look at the next slide to see that. In India, in the last 3 years that the Ministry of Finance has data for, let's look at the last year. 3,512 prosecution cases were launched. out of which 570 were disposed and 105 secured conviction. So you see as a percentage of prosecution launched, the percentage is close to between 1.3% to 3% of cases launched are actually convicted. And in terms of depends on, and this is of cases where the cases were disposed of by courts. In courts are extremely slow, are notoriously known for huge delays. We'll talk about that momentarily. But if we count conviction as a percentage of cases disposed of, it's close to between 18% and 35%. But if you look at Her Majesty's Revenue Service and Customs, I mean, they use very few search and seizures, mainly in customs cases and in drug trafficking and things, not so much in income taxes. And there the total prosecution was, they have about the same number of taxpayers as us. Although they have a much smaller population, they have a much wider base. Between 2016 and 2019, they had less than, except for one first year, they had less than 200 cases. And look at the success rate, it's really bravo. 88% to 93% success rate in courts. And look at the criminal sentences cumulative, 189 years of custodial arrests in prison, and going up to 157%. And we are nowhere near that. Our conviction rate is 1.3 to 3%. And this scores the point that search and seizures are not really yielding the result, and it is intrusive and it is unnecessary. I mean, in a modern tax administration, you use big data, you use artificial intelligence, you use data analysis in order to find out. And when you use that, taxpayers have no answer. I mean, they have the data in front of you. You have the data in front of you, and you can say that, look, this is what we found. And taxpayers, in most cases, they accept. So, I mean, again, if you look at this data, this corruption and collusion also has a hand in it. Now deals are struck and prosecutions are launched just as a smoke screen, knowing well that they will not stick. So you launch weak prosecutions with low evidence, and then they are struck down by the court. This is also a reflection on the extremely weak and notoriously slow and corrupt criminal judicial system, where very few people get convicted for any crime. I mean, unless if you're powerless, if you're poor, you go to jail for minor theft. But for most crimes, people do not get convicted. Now, the last topic that I want to discuss, I think I'm running out of time, is about the dispute resolution system. And as I had mentioned about tax administration diagnostic tool, which measures tax administration performance on how close or far we are with international good practice. In respect of the performance area on dispute resolution, a tax administration gets an A score if disputes are resolved in 30 days. If they are resolved in 60 days, you get a B score. If they're resolved in 90 days, you get a C score. And these are good practices of resolving disputes. More than 90 days, a D score. In India, even at the departmental appeal level, I mean, maybe Ashok can bear me out when he makes his presentation. I don't think any case, any appeal in the departmental level is completed within 90 days. So all cases are completed after 90 days. It's really very, very far behind to international good practices. And not just departmental appeals, case linger on in tribunals and in high courts and Supreme Court for years. And this favors taxpayers because even after paying any interest due on disputed tax, the net present value of the tax decreases significantly over the 5, 10, 15 years that it takes to finally resolve dispute in courts. So the cost of litigation is much more than recovered by taxpayers by delaying the cases, and the courts are very eager to oblige in that respect. So these were all my comments on where we are in terms of good practice, and I thank you for your attention. And also, so what do we come to the conclusion? Are we in good hands or not? I mean, this is something that I have presented. There are some light at the end of the tunnel. There are good things that have happened. Faceless assessment needs a lot of improvement, but it's a very good beginning. And then there are other areas. Corruption has to be tackled. Dispute resolution is in a very bad shape. And the tax design, which excuse me, which Professor Atul Sharma has mentioned about. Thank you very much for your attention. And I apologize if I have taken more time than required. I'm not sure. I was not. I think I may have taken more time than required. Anyway, thank you very much.
So thank you. Thank you very much for a very enlightening talk. You have really highlighted the important international lessons that India can draw. You have brought out the insights that you have got working both in India and many countries in the world. Now, my one question still remains. Bothers me, haunts me quite a lot, is that what is the way forward? Because this political angle is going to stay. For example, in the case of GST, it was a good beginning of the good negotiation, consultative process. It was long drawn, but in a federal system is inevitable. But what happened? We ended up in a hurried tax with faulty design. But how do we, and then you have brought out a lot of faults in our tax administration and tax design. But what is the way forward in this? Because this political economy is going to stay. And even in the case of good beginning, you have indicated, though you are not emphasizing, that that is also not done in a proper way. As in the case of faceless assessment, you have pointed out that that's a good beginning, but at the same time, there remains again the assessment jurisdiction. So that negates a part of the good thing that could the good result then faceless assessment can yield. So there's some of the worries that still remain with me, but we have gained a lot, but you cannot really answer this political. Probably very difficult to say that political economy issue will disappear. It will be difficult for you to say, but it haunts me quite a bit. Thank you very much for a brilliant talk. We greatly appreciate.
Thank you, Professor Atul Sharma. I mean, you're absolutely right. Political economy is very difficult to tackle. As Churchill had said, democracy is the worst form of government except for its alternatives. The alternatives are even worse. So in a democracy, we debate endlessly and never reach conclusion. In the US, it's the same. You have the filibuster rule where nothing changes because even if you have a majority to decide some issues, the opposition with less than 50% of the vote in the Senate can still stop any kind of reforms. So democracies are like that, but at least it's the best we have. So political economy will always be a challenge, and I have no silver bullet to answer this. But I have shown the way forward, and if the political leadership is able to do some of the reforms, the finance minister should at least try to have a Tadat assessment of both the tax, direct and indirect taxes. And then based on the report of that, they should focus on the areas where we are not following good international practice and try to focus on some of them. Because right now, the tax administration in themselves will never want change. It is vested interest in the status quo. So it has to come from the political leadership.
But newest technology could artificial intelligence, big data analysis, all this could be an answer.
Absolutely.
But that
To some
also has to
extent.
be introduced by the
To some
politicians.
extent. Absolutely. Thank you. Thank you, Professor.
Thank you
Sharma.
very
Good,
much.
very good point.
Now, there may be some questions.
Yes, should we listen to the
yes.
discussants first?
Yes, Ashok sir, would you like to go first?
I think Indira, if she does it, it is better, because why I'm telling you, most of the things, most of the points I've noted down. Since I was there for quite some time in the CBDT, I know exactly as to where the solution lies, but the solution will never come. But why it will not come and all. So that's why I'll answer later on. Let Indira cover this topic first.
Indira ma'am, if you're there. Yes, yes.
Hi, as you might see, there's no electricity in Hyderabad where I'm coming from.
It's working fine. Yes.
No problem.
Yeah,
Please go ahead.
so I'm just on my my laptop, which is luckily has full power for me for the time being, and also I'm on my hotspots. That is technology for you, and which the tax system is hopefully trying to harness. So thank you first of all to IMPRI for inviting me to be a discussant, and very privileged to be part to listen to Dr. Khwaja, and also to be part of this discussion with Professor Sarma. So what I would like to base my talk is, just some couple of highlights only. Then there is a vast amount that Mr. Khwaja has covered. So let me just talk about a couple of things on the domestic issues in taxes, and then go on to some international issues in taxation, some new frontiers. So, like Professor Atul Sarma has said, that not much has been done on direct tax reform since 2012, and there is incremental reforms which do happen. Actually, there have been two direct tax committee reports, 2018 by Mr. Modi, and then a subsequent one by 2019 also by Mr. Akhilesh Ranjan. These are with the government, and a large part of the reform.
You should specify Arvind Modi.
Yes, Mr. Modi, 2018 report is Mr. Arvind Modi, and 2019 is Mr. Akhilesh Ranjan Prasad. So there are these two direct tax reports, very in-depth, which are with the government. And I had the privilege of being the economic advisor to both these two reports. Subsequently, from 2019, many of the tax reforms have actually drawn on from both these reports, which are with the Ministry of Finance. For instance, you do see that some path-breaking reforms which make India's tax structure more competitive is a reduction in corporate tax rates. Today, we are 22%. If you do not take any incentives or exemptions. That is perhaps one of the best, in the world. I was working in Vietnam with the World Bank, and over there we had recommended to the government a graduated fall in tax rates from 26% to 22%. So now our tax rates can compete with some of our rivals in South Asia as far as investment and goes. We are now around 22%. We have also attempted, and it is difficult how far all of this will be effective, but to reduce, to incentivize, small businesses, and also entrepreneurship by removing angel tax. We've also tried to reduce tax evasion by increase scope of TDS, particularly foreign remittances. We had a very big study on foreign remittances, and we saw that a large part of it escaped taxation and even reporting. So now we have TDS, TCS on e-commerce platforms, and even foreign remittances and acquisition of immovable property. So these are all work in progress. And as far as litigation is concerned, a singular um, uh, biggest reform is, as Munawer has pointed out, is faceless assessment scheme. This was also part of the Tax Reform Committee report. It was first announced by Mr. Jaitley in 2018, and then it was announced on September 2nd, 2019 by the Honorable Finance Minister, Nirmala Sitaram. It was earlier called e-assessment, but now it is made called faceless. Just a few pointers of this scheme, and like Munawer has said, much needs to be done, but just let's see where we were and where we were going. I mean, how much have we accomplished? So we were in a system before that where everything, where you did file everything on the online, and you got your returns were processed. But as far as scrutiny was concerned, you went back to your jurisdictional tax officer. And then you had the usual instances of, face-to-face and all the accompanying issues that come with it. The faceless is a double-blind system. So, I could file my returns like I do in salary circle in Lucknow, but I could be assessed in Kerala, and I do not know who my assessment officer is. The assessment officer has never heard of me, so he does not get a one-to-one. He doesn't know what is my premises like. He doesn't know. He has not, over time, established some rapport with me. So it is a double-blind, anonymous process. The other important thing about faceless was it's a team-based approach, and this is where has been a departure, and could be would decrease corruption, which is a major issue, and there are other associated challenges as far as the department goes. The team-based approach mainly means that you had an assessment unit, a verification unit, a technical assistance unit, and a review unit. So earlier, the assessment officer did all these four functions. The first three functions, he did assessment, he did his verification, he sent his inspectors, and he did his, on the technical assistance, he decided which case laws apply. But now all this is done by different units. The assessment unit coordinates with the different units. Then he makes an assessment order, and he sends it to the review unit. And this is where Mr. Atul Sharma's point comes in. If there is any, if the assessment is made prejudicial to the SSC, there's an opportunity before passing the order, and this is an important point on faceless, to give an opportunity to the taxpayer to again say why he should not be assessed as above. Like Mr. Sarma said, that 86% is unrealized tax revenue. But if in this faceless with the fourth team, which is the review unit, will send the assessment order back to the SSC and give him an opportunity to explain and give further evidence. And this this team-based, double-blind, anonymous assessment is hoped that, in behavioral economics, what you say, you because so many people who are involved in this process. Of course, Dr. Khwaja has said, that in the end, after the assessment has been passed, he has to go back to his jurisdictional assessment officer to pay his taxes. So it is still work. Some work needs to be done on that. On the indirect taxes, yes, I was also part of a lot of these GST Council committee meetings. So in the way to put it, on the political economy front, it's very difficult when you have the chief ministers of 30 states trying to make a point, and each of them, wanting a particular tax rate or a tax structure. It is a case of too much democracy in some ways, you might say. And it is very difficult to sort of cater to everybody's sort of tax rate and tax structure, because what the strata of the poor is different in different places. Somebody's consuming something else in different states. So that is why in many ways this complexity in GST design and rates that Dr. Khwaja has referred to has come into this picture. But given that, what are the good points? The good points are, for the first time we have a common market, and states are coming together to talk about cooperative federalism and how we can improve that. And the other part about it is that there are certain units set up in CBIC called nudge units, which would sort of explore why GST taxpayers are not paying taxes and give incentives. What the point is that our GST tax gap is fairly significant at around 49%, as Munawer has pointed out. But part of the reason is GST is a subset of the total indirect tax system. The indirect tax system, apart from GST, has also customs. It also has union excise, and it also has two big components, petroleum and liquor, which are not part of GST. So the GST design itself excludes all these other indirect taxes. So the tax gap, if you take into account all these indirect taxes, will be perhaps half of what, about 22-23%, I would think. But if you come to the GST, the other thing about GST is that it excludes, because of composition schemes and because you have only 20 lakhs and above for services and 40 lakhs and above paying, required to be registered. Similar to income tax, where the exemption limits are very high, the exemption limits for GST for registration thresholds are also very high to the size of business. For instance, if you look at unincorporated enterprises, out of the 6.34 crore unincorporated enterprises, 60% are outside GST, if you take the turnover. So you already have the bulk of your businesses outside the purview of GST, similar to the story with your direct taxes. One issue which I would like to point out is the World Bank in the ease of doing business has ranked India 63 out of 190 countries. But in paying taxes, India ranks much lower. It is 115 out of 190. And the reason why the World Bank ranks it significantly lower, because the number of payments or the frequency or the number of agencies for which you need to pay taxes, there are 12 such payments or agencies that you need to approach, whereas the international best practice is 3. We also spend 254 hours filing taxes, whereas, the international best practice is 49 hours. And what is really significant, and this is what Munawer also points out, is corruption. On average, according to the World Bank survey, 49% of your profits are being paid as either taxes or contributions. Now, with a marginal tax rate not even hitting 49%, you would try and understand what is this excess, what is this. Our marginal tax rates are at the most 33% if you take corporate taxes. The survey done for corporate tax, big companies actually, the ease of doing business, that 49% is a big number. As against the South Asia average is 43%. So this is something really to think about. And it all comes, so one is your tax policy, which in itself gives you a low, this is a 16% tax to GDP ratio, but on tax policy and the Laffer curve, but it also depends on enforcement mechanisms, the compliance costs, the ability to pay, the size of firms. Smaller firms like unincorporated enterprises, if you have a larger number distributed, the compliance rate is much lower. The price elasticity of these goods. For example, in GST, you'll be surprised. They wanted to increase the tax rate on sin goods. It was already 28%. They wanted to increase it to a higher extent. So we did an exercise, is it worthwhile to increase the tax rate on sin goods from 28%, that is cigarettes and alcohol, to maybe 35, 40%. In our exercise using NSSO data, we found there was a substitution effect. People will still consume it, but they will consume less of milk and eggs. So tax rates being very high, you might get greater tax revenue and you might have good compliance, but it may not necessarily be welfare oriented. So these are the trade-offs that policymakers always need to make. Not, and then the other thing is on enforcement. Yes, how good is the enforcement? In GST, for instance, in the initial stages, it was very complex and there were a lot of loopholes, particularly for input tax credit. It took 1.5 years using a whole slew of artificial intelligence data, mapping, as well as network analysis to sort of peg in. In last year, in 2019, they actually cancelled almost 2 lakh registrations, and also they caught about 200 fraudsters. And the moment that signal went through, they've not yet done any assessment, but they just cancelled and caught some fraudsters. Through this particular analysis, the tax collections went up. So there is always this trade-off, how much enforcement is good. And in a society where, the first thing when tax is imposed, I remember in GST, there was a trader, how do we evade the tax? GST laga diya, lekin how do we make sure we don't pay GST? So in a culture where the first thing is, how do we not pay tax? That trade-off was how much enforcement should we have, how much is too much, how much is too little. That balance is something that needs to be worked out over time. So these are some of my points. I mean, I would be happy to, if there are any questions, but moving on to international taxation, just a couple of points. Typically, taxation systems are, looking at tax equity, efficiency, and you're looking at issues of simplicity, transparency, and accountability. Transparency is now a large part of it because of the faceless assessment scheme, and efficiency has been addressed. But the international tax issues, particularly which leads to base erosion and profit shifting, those are a significant source of revenue as countries become more globalized and global value chains are developed. So in this, the other tax concepts which come in are sustainability and proportionality. For instance, you find that global corporations have different tax rates and they move profits across different countries. So right now, the OECD deliberations on tax challenges due to digitalization and open borders, they have the 15 pillars on which they're discussing how we move from an international tax system, which is based on principles which are 1920s League of Nations principle, where it's source-based taxation and a supply-side economics sort of view, to today's world to capture more residence or where value is derived. For example, if you sell the goods, Amazon sells its goods in India, the value for somebody selling in China derived from the market in India. How do you capture that? So if I am going to pay for some good in India and that money goes to China, but China would not be able to sell in India if I did not exist. So India deserves a share. These are big issues that are now being talked about and deliberated in the OECD. So now we have concept of tax neutrality, tax proportionality in international tax issues. And India's thought process on this, and as expected, Professor Sarma, like in the GST Council, They are big countries which have different views. We have the US views, which takes marketing intangibles approach. Then we have the UK view, which has a user-based approach. We have the EU view, which has a different global and minimum-based approach. And we have China, which is generally silent in all these issues, but we don't know. And then we have developing countries, and we have India's significant economic presence issues. So in all this, similar to GST, the way we have been going about, hopefully the final international tax system also does not, the design of a new base is not hot, what is the word to use, is more uh, is more sustainable and more proportional and more equitable than it is right now. With that, I'll thank you. And I was some excellent points that uh, Dr. Khwaja had raised. I wish I could touch on it, but if we do have time, yeah, I would be happy to.
I have one question to ask, Indira. That is regarding the faceless assessment, because now that here in Delhi, I am following this faceless assessment. The biggest problem here is the good intention or the bad intention. I will not name the case. I know the exact case of a very big case here in Delhi, where everything happened, as you have said, now that there are 3 or 4 different segments who are dealing with the assessment part. One is doing so-cause, another is doing all these things. It has not happened. The notice was sent. The party just said, and the notice again, the same thing. Through email, the notice was sent, given only 3 days time to answer a host of questions. So the party said, this is the question you have asked. Give me at least 3-4 days time, 2 days being Saturday and Sunday. Was not given, and no so-cause notice was given, no draft assessment was given, and the assessment order has been passed. This is what was happening before also. You know that prior to this, we experimented with a DRP, dispute resolution process, where the draft assessment order used to go to the DRP consisting of 3 commissioners. I talked to the commissioner while I was in service. I called them. I was the principal chief commissioner here, and I used to get complaints. I called the DRP people and said that, why are you not looking at it? No, sir, because, we do not know that in how many cases the High Court has taken decision, this one has taken decision. Here, the biggest problem again will be coming is jurisdiction. The assessee is Delhi-based, is being assessed in Bangalore. The Bangalore High Court or the Delhi High Court judgment will come. So, because of the scary situation, what people are doing it, Mera kya jata hai approach, you add up and see in appeals. The same thing if it happens in faceless assessment, where will we go? Of course, it is too early or premature to comment adversely or favorably on this one, but people are following the same thing. The biggest problem is intention. Biggest problem is intention. In fact, if you take it as my lecture continuing, because all of you statistical details, you, Khwaja and Professor Sarma have raised all these questions. I'm going to answer and I'm going to respond to all these things. Anything right from the technological stride, I can admit, I can tell you the department has really achieved a lot. Wherever the technology has been introduced, the CPC, TDS here in Delhi, and from computer, now we are doing virtually everything, including the picking up the case. No one knows as to where my case will go. Although in my return, my phone number, my place, my everything is written there. So people are slowly approaching. People are slowly approaching through phone number. Earlier also, the inspector or somebody else is ringing up and they are trying to do it. This is happening. The here thing should be enforcement. You have no mechanism. For 6.5 years, I was working with the chairman, finance minister and revenue secretary, and I was crying myself hoarse every time that you have so many layers of supervisory officers. Why the grievance cannot be settled? And the grievance is not taken care of. Grievance is not taken care of. Today also. So any system will fail unless and until many blatant issues are there. Many blatant issues are there. I know one case again here in Delhi, a 75-year-old couple who has been deriving income for the last 20-30 years from the income from house property, getting rent from 3 multinational companies only. And for 10 years, I have seen the return. He had come to me. I have seen the returns. He paid income from house property. He had income from interest. He says that, sir, I'm getting my income from house property every year used to be 55-60 lakh rupees. So he gets 5 lakh interest from the fixed deposit. And 14 lakh rupees he spent in 1 year on credit card. You know what happened? His assessment was completed by computer. That was done. And one day he receives, 3 years afterwards, he receives a demand notice of 1.5 crore. You know what was that? 148 notice was issued. It was torn off in the office. Notices were issued, torn off. So he never received any notice. I'm only coming to one point that I drafted a letter. I was very angry because, first of all, I looked into all the papers. I thought that the assessee may be doing something. I said, listen, you will be held responsible. He said, sir, I'm a 75-year-old. I don't have any requirement. And my income right for the last 10-15 years is the same only. I have no other thing. And 148, what is the 148? Nothing. There is no proof there in the record. Now, the problem is that if you go for appeal, 20% of the amount has to be paid. He says, I don't have money. If you are raising a demand, frivolous demand, you are worth, I have seen 8 lakh rupees income has been converted into 2.5 crore and I immediately transferred the income tax officer immediately. And the union came to me and said that, sir, you have transferred the people. This is not in accordance with the agreement reached between you and the union. Then I told him in Hindi, I said, okay, so can we introduce one modification there in the agreement? He said, what? You have a right to do dakaitis. I told this. I said, have you seen the assessment order? I called that GO president. I said, read this assessment order. Tell me what's going to do. I will call him back to the place and I will charge sheet him. Then the fellow with folded hands tells me that, sir, please take a lenient view. I said, take a lenient view of corruption. What I'm saying is individual officers are taking care of it, but there is no institutional mechanism. And there is no intention. You may change whatever rules you do it. Your faceless assessment, you are going for that. The Professor Sarma was mentioning 86% of the case where the demands are there. What is this appeal? R.K. Tiwari, a very good friend of mine, he brought this appeal thing. I have been telling board, please do something. Let the Commissioner Appeals hand be strengthened so that Commissioner Appeal delivers the judgment in 6 months' time. And till such time, no coercive action to be there. 50% of the corruption will go away. But this has never happened. On the other hand, today, the moment you assess, as per the rule, the Commissioner Appeal is not allowed to take up that case until more than 1 year has passed. The assessing officer knows it. Frivolous demand is created, 5 crore. So you have to pay 1 crore, 20% of it. The fellow is not worth even 5 lakh. And your appeal will not be heard. Then why should he be asked to pay tax? So these are, there are reforms can be done. I have appeared before Parsarthi Som committee for regarding expenditure part. There are so many things in there. I have for 6.5 years, I was there in the board, in the international tax also. I have introduced reforms so many places. The whole field, there are 300 single income tax officer charge. I agree with Khwaja that the jurisdiction thing should be done away. It should be done away with. It should be done away with. But I suppose
actually, Mr. Sinha, I
Yes.
think this lecture has to be closed.
Yes.
I am sure you have got many interesting experiences.
I know.
I request Dr. Arjun Kumar to invite you to give a lecture on this administration. To highlight.
I will. In fact, this is what I told prior to the seminar started. I told Arjun Kumar that if you can I have, because I was there for the last 10 years. I have been looking at it regarding administration, regarding this one also. Appeal,
Yeah.
no, I just wanted
No,
to come
we
on
look
one point.
forward to that day
Yeah.
when you will be given talk. Because
Yeah.
today we have a very limited time,
I know.
and already we have.
No, because you pointed out a very important thing, 86% appeal. This is there. This is the result of that.
Yeah, I know. Thank you.
This is the result of that. And it has been created by the department. It is not that it has come on its own. And there is a solution. But the solution nobody wants. Nobody wants
That's
solution.
it. That's the point.
And political angle, you say that this is not political angle. This is a pure, simple, small administrative and callous angle. That's all.
Okay. Okay. Thank you. Thank you.
So,
Dr. Arjun Kumar, are there any questions? I see there are 2 questions.
I will just read out some question here and on Facebook Live, and some also I have written so that Khwaja sir also can, and we can also learn from the panelists. So we have one question here on the chat box, and it is from Amitabh Kesar. Dr. Munawer, as an expert observer from outside India, do you think that the current personal income tax regime is robust? What are the areas the government needs to step up and lessen some burdens? We need to have a super rich tax. I think this is especially in the context of COVID. And one question also we have that is on Facebook that is pertaining to the IGST and credit refund, input tax credit, those kind of things. That difficulties also from 2 years someone has not got. And we have one question from Kumari Anjana that Dr. Khwaja, privileged to see you live. My question is, how can the government unburden the tax structure of the common peoples, especially the lower middle class, the vulnerable small and medium industries, shoulders during the pandemic? Again, pandemic related question. And sir, on the basis of pandemic related, let me also add few questions. During this budget in February, we had focused a lot on capital expenditure and capital investment and infrastructure, and somehow not focused very much to UBI or what in US or other countries, many packages of 2 trillion, even in Europe, direct cash transfer or those kind of things going. So what is your view on that, especially looking at all the backlogs of India health infrastructure and others? One second question was that there is also a lot of notion that there is a lot of money now or liquidity parked for the loan in the international market. So how should India leverage from that? Will it help us? 2 points which you mentioned, that the faceless assessment is very good, and now we should also go geography-less or space-less or no jurisdiction as you're suggesting. So are there any IT, blockchain or those related anything, any good practices? Would you like to stress more on that? And how would the commissionerate will work? Because we know that Mumbai commissionerate, almost 30-40% of our taxes come from there. So there is also inequity in terms of also training capacity. So how to bridge that inequity in our tax structure in federal or regional level as we see it? And one question also, since we were discussing political economy, time and again, those who are in power or those who are powerful, there is usage of NIA, CBI, and somehow, as you mentioned, that since it happens from top approach, so that should be avoided. So how to also break this business as usual? And one question also I thought to ask that, so what will be the structure if we make our tax administration integrated? So will CBIC and CBDT what kind of new structure will come in? Will it be a board again, or what would it look like in your view? And yes, this last question, that in terms of corruption, governance, or grievance redressal, how do you see the business as usual scenario, or that Indians don't give value to time, that it goes on for a year? How to also get a grip on that we are periodical and timely, so that everyone has trust in the system? So you can choose to answer any of them. Thank you very much. It's going very long. Over to you. Yes. So kindly unmute yourself. So kindly unmute yourself. Yes, you are on mute. Yes.
So, Dr. Khwaja, you respond briefly to some of the questions.
Yeah, thank you, Professor Sharma, and thank you, Arjun. also Ashok and Indira for very important points that you have raised. As regards the question, you have raised quite a mouthful, and I can only answer some of them. Let's talk about the integrated tax administration. I have been involved in the integration of tax administrations in many countries, and it needs political leadership and will, because the tax administration themselves don't want to give up their post. You know, there are two chairmen, 10 members. They don't want to reduce that number. Um, and also vested interest in keeping them separate. But if the political leadership wants the change, that is the most important, and it can be done. I mean, if I am a particular company, say Tata Motors, uh, my taxes, income tax, and VAT or GST will be assessed at the same time, so that I have all the information about corporate income tax and personal income tax. And this requires both a lot of uh, communication with the staff associations of both the organization. They don't want to change. You have to inform them that this change will happen, and you have to inform them about, I mean, remove their fears and tell them why this is important and why this is the good international practice, and it is followed all over the world except for a few countries. I mean, customs will always be same because it has a policing function, but as far as indirect taxes are concerned, non-enforcement functions, the indirect taxes, and all, they should all be integrated into one agency. Um, and under one board, yes, under one board, under one chairman, and it is not an easy solution, but Pakistan has done it very recently, about 6-7 years ago, and they have found a kind of middle solution, which is not really an ideal solution, but a kind of compromise. When a chairman retires, if one chairman was from the indirect taxes, the next one would be from direct taxes. But again, that's not really a good solution. I mean, the chairman has to be someone who's there for several years, all at the same time, so he can have a strategic vision about how how to integrate how the integrated tax administration will work. Now, um, coming to direct tax transfers, I believe that is the right way to go, because if people have money, they spend it. Yeah. Okay, thank you.
Mhm.
Sorry about that. So in faceless assessment, direct tax transfers is the way. And as I quoted Roosevelt, we have to put people back to work. That is the important thing, and find ways to do that. Have projects that will. I mean, and capital infrastructure projects are not a bad thing to put money in the hand of people, because ultimately, if you're building roads and highways and airports, you do employ a lot of people who are currently unemployed, and the private sector is not in a position to provide that employment at this juncture. So for medium and small enterprises, again, I am a strong proponent of the fact, and we have seen it in many countries that have a good tax policy. The regime doesn't change for small and medium. It's the administrative ease. You have fewer returns to file, not every month but every quarter, if you are filing for GST, and simplified returns, simplified procedures, pre-fill returns. Those are the ways to help small and medium enterprise. Lowering the tax rate to small and medium enterprises is not the way to go, because then you do not create Mark Zuckerberg or Steve Jobs. If they had a different rate for small and medium taxpayers, they would have always remained small. And there was because the marginal effective tax rate for small to large or normal is so high that people want to stay small. And it's easy. I mean, you cannot split individuals except with a sword, but you can split companies. You can split companies to endless units, and that's what people do if you have a different regime. And in many post-Soviet countries, they tried to do that to the great disadvantage because the companies keep splitting. So having a lower rate or lower average rate for SMEs is not a good idea at the corporate level. Not for individual tax. Individual income tax is the one where you use progressivity as an individual, as a businessman. But for firms and for companies, the rate should be uniform, so that it's good for the economy, because you grow from a small student who's playing with Facebook to become one of the richest persons in the world, Mark Zuckerberg, for example. So you allow the system to let enterprises grow from small to large, and rather than stay small. So that is my on GST. I have already talked a lot about, there are 15 or 20 different forms. There are returns to be filed in every state. All that has to change. There has to be a uniform tax administration that looks at VAT for the whole country. Either the states or the center should have a negotiation and decide to follow the Canada model, for instance, to decide what it does. Because with this, it's not only split between direct and indirect taxes at the federal level, it's also split between direct and indirect taxes and 28 states. So it creates a real mess of a situation in terms of administering GST, and creates a huge compliance cost for taxpayers. I will stop there. About faceless assessment, I think Indira has spoken a lot, so I don't have anything more to talk about that. Business as usual, I mean, again, business as usual will remain business as usual. I had mentioned about 5-6 years ago, or even earlier, I had a presentation at Habitat Center where Professor Parthasarathi Shom was releasing his book, and then Mr. Bimal Jalan, a former finance secretary, was there. And the attitude is the same, business as usual, because I presented how the world has changed, how the entire world is now integrated. The tax administration have integrated all over India. And he said it's an excellent idea, but in India it will take 100 years to happen. If that is the attitude of our senior bureaucrats towards change, then business as usual will continue. And that is something that the younger generation has to take up. Also, the political leadership has to take it up, so that things will change only if there is a move from the top. Like in the case of faceless assessment, the income tax department would not have done it without the backing of the top leadership. Thank you. If Ashok and Indira have anything to answer on those questions, I'd be very grateful.
Actually, the time is limited. Otherwise, I would have answered the questions which you have raised regarding the reward of an independent director after the chairmanship or other post. That is happening, and that is here in India, all the secretaries and others, those who are retiring, they are being given, okay, you are being given 4 companies, 5 companies, each company, and so you will be getting about 40-50 lakh rupees as independent director. That is happening. So nothing, that sort of thing, this will never go away. There's a political trophies, I can say, distributed by any government.
Right. So, sir, one last question, just as a way forward also, because our bureaucracy or our planning, in fact, academicians also from the NGO sector, this thing comes that India is so huge, so diverse. So the problem of scale and complexity comes in, and it kicks in. I wanted to know that, how do you see how China has done it? They have done it, very openly. They call people from all over the world, have predictability, and they have, I would say, stamina and also hunger for doing these kind of things. Political will, yes, but so what do you think the inherent processes of change are there, learning from China, Brazil, Russia, or South Africa, or the BRICS countries, that India can emulate small changes, as Chinese say that 1 stone a day, sort of thing. What in your view, sir, globally?
May I also add one small thing? I'm very curious.
Yes, please.
In one of your charts, you have shown the potential, the percentage of relation, the gap. You have shown the gap in the relation and potential. But you have shown the gap of India is less than China's. While at the same time, the tax GDP ratio is several times more in China than India. How does it happen? If there is such a big gap in GST in the chart relating to GST of shown, the gap of China is 55% as compared to 48% in India. But in the case of tax GDP ratio, China's is much higher than India's. India's a couple of times more. So how do you really reconcile these two things?
Yeah, they're both very important
Very
questions.
curious about it.
Thank you. These are very important questions. The tax GDP ratio is for all the taxes combined, indirect taxes, direct taxes, corporate taxes, personal
Right. Yeah.
whereas the gap is
GST.
for GST. So there may be some weaknesses in GST in China relative to India.
But it is not an important tax.
Yeah,
Relative importance must be much less than India.
exactly. That is possible. That is the case. And but you rightly pointed out that China had a much lower tax to GDP ratio compared to India,
Let's say.
and now it has moved ahead much higher. And many of the other BRICS countries were always at a level above 25%, and they have stayed at that. Russia, which was very high, I mean, because of the Soviet legacy, has come down a little, which is also a good thing because they were collecting too much of taxes, which is also not a good idea. But they're now at the 30%, 32% level, which is good. How China has achieved this, again, China uses a lot of and receives a lot of advice because they are really willing to learn from the world. We are also taking an advice, but we are kind of very argumentative. I mean, Professor Amiresh Bagchi, who was my teacher at Harvard, he has written a book, The Argumentative Indian.
Amartya Sen.
I'm sorry. I meant Amartya Sen. He wrote a book, The Argumentative Indian. So
I know.
in India, we argue things to death, and nothing changes. And that's a clear example is the GST, which was in the Empowered Committee for more than 20 years. And then finally, it has come to some shape. It is not perfect, but at least it has happened. We didn't know whether it would happen or not. So again, we have to have an attitude, a constructive attitude towards reforms. And again, as I said, a good step would happen if we agree to find out where the weaknesses are. Unless we do that, unless we have an introspection or something like a Tadat assessment or any other kind of diagnostic, which gives a third party view of where we are weak and how we ourselves will not be able to change unless we identify things objectively. And we need to identify the issues and then the problems objectively, and then have the commitment to go full. What happens in most Tadat assessments have happened in more than 100 countries around the world, as I said, even in advanced countries like Canada and the Nordic countries. Soon after the Tadat assessment, the report is given to a working group, and they look at the weaknesses and try to find out how to improve them. So that is the way forward to move, and that's how China has done. And I mean, they receive a lot of good advice. I mean, we do too, but again, we argue a lot about how we move forward with them. Everything becomes very political. as it is in the US. I mean, but in most European countries, they have a much more constructive approach. And China, of course, it's not a democracy. So if the supreme leader thinks that this is a good idea, it's implemented. But in India and the US, it's much more difficult. In Canada and rest of Europe and other countries, things happen much more constructively. We have to have a constructive approach to the whole thing.
Thank you. Thank
I
you
think
very much.
We're gone well beyond our time. So
Yes,
over to Professor Sharma.
But it is worth it. You have learned a lot from you. Particularly, you have made the presentation in an international perspective. A lot of things to learn, but how far you can practice is another issue.
Exactly.
Because eventually, you are talking about the big politicians' initiative. But when the politicians themselves have the vested interest, reform becomes a casualty. Thank you very much. And once again, I thank Dr. Arjun Kumar for giving me this opportunity to chair this brilliant talk by Khwaja. I learned a lot from his talk. Thank you very much. Khwaja, let us stay in touch.
Thank you.
Thank
So let
you,
me
Arjun.
just finally propose a vote of thanks. But before that, Ashok sir, would you like to have your concluding few lines?
No, of course, the international perspective, Indira Iyer and Khwaja Sultan, they made presentations which is an eye-opener for all of us, and we should learn, provided we have the intention to learn. The basic thing ultimately boils down to our intention. So many committee reports and other things are there, the recommendation is there, but provided we have a intention and willingness and the political will to implement, that's all. Otherwise, tax reform is needed. GST is a one step in that direction. It is done. Direct tax reform also is needed. And the faceless assessment is a step in right direction. I think over a period of time, this will also attain its maturity. So thank you so much.
Thank you so much, sir. So let me just quickly propose a vote of thanks. So on behalf of Center for Study of Finance and Economics at IMPRI Impact and Policy Research Institute, we all thank you, IMPRI team, very much to all of you for this special lecture, Are We in Good Hands? Is Tax System in India Following Good International Practices by Dr. Munawer Khwaja, sir. Thank you so much, sir, for joining from Washington, DC this morning there. And to our chair, Professor Atul Sharma, sir, thank you so much. And Professor Indira Iyer, ma'am, from NCR, and Ashok, sir, we'll be having you again. I'll write to you to discuss more and learn more from you. Thank you so much for
send me your mobile number. I have not taken down your mobile number.
Sir, I'll just send on email.
Email you can send.
I will just send. No problem. Thank you so much. Thank you so much, everyone, once again. And
okay, thank you.
Have a nice day.
Thank you. Great.